Hello and welcome to this very special show on budget expectations from commodities. We are going to chat about CTT today, or rather commodity transaction tax, and also the other expectations that the commodity industry has from budgets this time around. Joining us on the show is Mr. Jignesh Shah. He's Vice Chairman MCX and he also is the President for the Commodity Chapter on CII. Also on the panel is Mr. Anand Kumar, who is Chief Corporate Services NCDAX. We also have with us, joining us, Mr. Anil Mishra, who's MD and CEO NMCE. Sitting next to him is Mr. Dilip Bhatia, who's MD and CEO from ACE. And joining us also is Mr. Rajnikant Patel, who's MD and CEO ICEX. Gentlemen, thank you so much for joining us, and starting with you, Mr. Shah. And what's your sense on all of this talk about CTT and people talking who have no interest or participation coming into the commodity exchanges? How do they get to talk about CTT?
See, first of all, this has been talked by nothing by any of the government. This one, it has been by an exchange chief, which is a corporate entity. So we really don't know and never heard that completely different industries advocating to implement something on a different industry. Cement cannot talk of steel and otherwise. So this is even was surprise to us. Exchange chief, stock exchange chief is advocating this to do.
Mr. Bhatia, coming to you now, and of course there have been various concerns that if the CTT was in fact levied, I mean we of course are debating against the point, then it would spoil this market by, in a lot of sense, because you will have that dabba trading coming back into the markets, you will see volumes going down, you will see cost of trading going up much higher.
Yeah, Manisha, exactly the way you said. I think dabba trading or illegal trading, what we call, is a big menace which the commodity exchanges are already fighting. The volumes, as we know, in the dabba trading are far higher than the organized markets, mainly because of the various factors such as no margin requirements, no daily mark-to-market requirements, there are no taxes, there are no KYC requirements. Now, in what our view is, and my view particularly, is that in absence of a very autonomous regulator, which has the search and season powers and powers to levy penalty, any attempt to levy further tax on organized markets, sort of a CTT, would lead to people moving from an organized market to a illegal market and dabba market. Dabba market, apart from everything else, also creates a lot of socio-economic problems. A lot of cash moves on, parallel economy, not good for the country as a whole. If further taxes are levied on the organized markets, in addition to the various other requirements of KYC and all, we see and we feel that the volumes will further shift from organized to unorganized market. The size will become much bigger, and that will lead to larger problems of the economy, parallel economy, cash, further socio-economic problems. So that is very a big concern and big scare which CTT could bring in for the legal markets.
Mr. Mishra, coming to you now, just as we are trying to develop and strengthen this market more, there is this talk about FMC getting the autonomy and all. Why are we talking about something that will not help this market? I mean, even if it's for generating revenues for the government in this case, even if it is for getting in more surveillance, as in not invasive is what they are talking about, do you think it will help in any sense?
It will not. And this kind of expression has been given by the people who do not understand the basic fundamentals of the commodity market.
Sure.
The fundamental of the commodity market is that there always is a sense of supply and demand which decides the price for the commodity. And the effort should be to balance the supply and demand. And for that you need a price discovery so that supply can be increased matching the price. Now, if that is to be efficient, it has to be large. People should be able to participate, and for that you have to have more enablers rather than putting factors which will stifle the growth of the commodity market. Right now we have very limited enabling provisions. We don't have institutions participating. In order to bring small farmers, we need to have the aggregator system. We have some of our rubber cooperative societies are functioning as aggregator, but many such aggregators need to develop. We have objective that banks should finance the commodities and agricultural sector as a priority sector, but they are afraid of risk management because you have the risk on the underlying asset itself. There is a risk on price. Now the exchanges have created a system through warehouse receipt financing where banks will have zero NPA if they fund the commodities, because three risks are there on the commodity funding. One is that quality bank is not aware of. Now exchange warehouses are ensuring that quantity would be available, and biggest risk is the price of the commodity, and therefore they were having haircut of 40%, 50%. Here, as an exchange, we directly pay to the bank once the warehouse receipt is given to us. So such enabling provision should come, and CTT is not an enabling provision. It is going to distort. We have to expand this market. So FMC's autonomy is required. A lot of these enabling facilities have to be done. Banks have exposure on commodities through their clients. They have to understand that this is the platform for risk management for them as well, and they will have lesser NPA. So people without understanding this, part of this they know, and they have made the comments.
Well, absolutely. Mr. Rajnikant Patel, coming to you then, we continue to debate this in the global markets as well. There is no CTT there. Even if there are some taxes, they really are on the lower side. With the number that we are talking about in the Indian markets is really damaging.
See, I think I see this as there is a fundamental misunderstanding or lack of knowledge, because we are comparing two disparate markets. They are totally separate, and understanding of the fundamentals of these two markets, if you understand it in proper perspective, I think the whole issue of whether there should be a CTT on the commodity markets at all will just vanish. Absolutely. Because you just see what are you dealing in market, commodity markets, physical market, and you are dealing on commodities which are underlying. And that's why globally there are no taxes, because already in the ecosystem, from the grower or a producer till it reaches the end consumer, there are so many taxes and other incidents, VAT, net, excise, sales tax. I mean, there are so many things which are applicable. Now, let us ask a simple question. Are those taxes applicable on the equity market? No. I mean, anybody will say that. In that situation, if you put it in a right perspective, you will understand why globally there are no taxes on this.
Mr. Shah, just coming back to you on that point that Mr. Patel raised up, an exchange head or a banking head goes and talks about commodity markets. They have no exposure. They don't trade here as well. Isn't it about the commodity industry that the government really needs to listen to when they are formulating all of those policies?
Government has not at all. They have resolved this issue.
Okay.
But it is unnecessary getting propagated, and the whole noise is getting created. For what reason, we don't know. But that is the case. So government, I don't think ever we have heard this. So government has been, I believe that they will see through this, what you can say, the whole advocacy, competitive advocacy, by a policy proxy. They will see through this, and we really don't think that there is we have any time have witnessed that government is not clear about it. And if in direct tax code they were saying that STT should go on equity F&O, if that exchange chiefs get together and worked hard, rather than propagating that it should be levied on commodity, currency and interest rate, I think they would have achieved a better result, because government always welcome the proper research, data and empirical evidence.
Let me put it this way to you, Mr. Anand Kumar, this time around. How have you seen the interest, the participation come in case of commodities, and how much of a damage do you think CTT can actually come here? And I mean, as we speak to most of our participants there, the broking houses and all of that, what's the feedback coming in from them as well?
See, today the value chain participants are using this for hedging purposes. When they are using this, and if the CTT is introduced on this, obviously the cost of hedging will go very high. So today, because of the high cost of hedging, probably what will happen, the hedges will go out of the market. When they go out of the market, the liquidity becomes thin. So when the liquidity becomes thin, automatically the depth of the market is lost. So then you are killing, or probably you are advocating something where the market which is used for hedging purposes will be lost its relevance.
Well, it's not just about creating participation and volumes in the Indian futures commodity markets. It also is about giving that much of an employment, creating an economy, giving price discovery and hedging market as well for the Indian markets, not just here, but for the global reference prices as well. Mr. Shah, this one is coming your way now. I mean, how do you think in last 10 years commodity markets have made a huge change in the Indian economy or the markets here?
See, I think we are an open for competition. You've seen many national exchanges are doing, many regional exchanges are contributing. So that way, in just 10 years, this industry has transformed big things. Price homogeneity come across the India. Spot markets have really started functioning in linkages with the futures market. It has generated huge number of jobs. I told you 15 lakhs has been there, and warehouse infrastructure has been created. So that way industry has contributed a lot towards transformation, and thanks to government open policy.
Exchanges under the guidance of the Forward Market Commission have been running a take-up plant program, whereby we have been installing take-up boards in various mandis. Now, when we often questions are asked, have the farmers are participating, have they benefited? I think let's recognize the fact that in India, 83% of farmers are marginal and small, but they get benefit by looking at the price of the take-up board. what is the produce going to be, selling in 2 months down the line, 3 months down the line. That helps them to decide their sowing patterns, helps them to decide whether they need to sell now or sell later on. So this is one big contribution I think the commodity exchange markets have done to the whole economy as a whole.
We have farmers and associations on record saying that they have helped so much or they have achieved so much out of this.
The one more thing is the price discovery mechanism, which has happened to a great extent in this particular industry. This recent, if you see for the last 10 years, the price discovery has evolved over a period of time. As Mr. Patel said, in terms of the transparency which has brought in to the industry as a whole, I think is a great advantage which we say about it.
Mr. Shah, also domestically the prices are available, but they are available for the global markets as well. They can always come and refer these prices on the screens there.
We've been invited by the major other countries, including Singapore as well as, to set up exchange there. That speaks for itself the power and the domain knowledge and the excellence what Indian commodity exchanges have contributed in the global map.
Clearly.
Now this is it, and it is again thanks to the open policy. We are all child of liberalization policy of the government, and we remain committed to contribute this development aspect.
Well, absolutely. Those are the points coming in from all our panelists. Mr. Shah, just to throw everything at you at the same point on CTT, the other people versus the commodity industry here, what they say is that if equities is being taxed, so should the commodities be. If there's revenue generation happening from there, it should be happening from there as well. The volumes have grown in commodities. There are new exchanges coming up in commodities, so they can come out with that money as well, is the debate that they are coming up with. Apart from that, they say that there should be more surveillance happening, and this is one way of perhaps doing it because they would come into that tax bracket as well. How would you react to all of these things?
If they have problem with STT and F&O, they should justify like us as an industry together. And if they have rational, what you can say, empirical evidence and cost of hedging has to be reduced, I really don't think that government have ever not considered this. Rather than saying that it should be spread onto all other asset class, 3 other hedging class, that is commodity, currency and interest rate. If that kind of energy we've been invested in researching why it should not be there on F&O, because capital gain on cash segment, it's government decision to have either capital gain or STT. But on F&O, if stock exchange industry do this, they'll be able to get a favorable result.
Mr. Patel, taking a summarization of that, the same from you as well. This is a place where we are hedging, we're looking at price discovery, we're building up an economy because this is something we use, produce, consume and export and import as well. How is that even remotely compared to the other asset class?
It is not, in a simple word. And just because it has uses the word derivative doesn't mean that it's same. It's just a structure of an instrument, and underlying is very different. So I think we come back to the same thing, that we are starting on a wrong premises of a wrong. Apples and oranges are different.
Mr. Anand Kumar, a similar question to you there as well. Shouldn't we be looking at strengthening our spot markets, our APMC rules, our tax information, our VAT rules here, instead of talking about an additional tax which just doesn't make any sense for us?
Yeah, you are absolutely right, Manisha. See, today what's happening, each state has its own laws in respect of the APMC. Some states do not have APMC rules at all. Now today what's happening, what is happening in one APMC mandi is not known to another mandi which is 50 kilometers away. So the price transparency is not there, it's totally opaque. Even within the mandi, what is happening between price discovery between one person and the other is not known to the third person who is sitting next to him.
Mr. Bhatia, coming back to you then, and you talked about the illegal trading when we started the conversation there. I mean, we always talk about a parallel economy, I mean, in a bad word, of course, in that sense, and this would only take this higher, on the higher side there. There are people who do that, there are people who talk about it as well, there are people who advocate it as well, but isn't it a better way to do it on an organized, and this would only be another step encouraging it in some sense?
We don't want to, we actually want to discourage that market, bring people into the legal market, bring people into the more safer markets. The legal markets or the future commodity exchanges are very safe. In last 10 years, we have not seen any problems in terms of pay-in payouts. There have been no margin problems, there have been no defaults. So it's much easier for people and much safer for people to trade on the legal markets than on the illegal markets.
And we definitely do not want to discourage the cost of transaction by taking it so high because of this.
Yes, the one thing we want to do, that we have to find a solution for our problems, and the solution for the problem is that you should encourage that there should be enough supply to meet the ever-growing demand. And that supply cannot be increased by putting curb. You have to encourage and incentivize and inform the people what to produce and what is in demand. And commodity market pricing gives this kind of information to the producer and to the consumers.
Just 2 points I want to make, very, very important 2 points.
Sure.
Last 3 years, the small and medium members or the market intermediaries, their whole survival is based on the income from the commodity markets. And stock market incomes are really less for them. I'm saying if it has survived, it will really affect their balance sheets. And we want them to survive because they provide a very big role in making people in participating in the equity markets, in the commodity markets, in the fixed deposit market. We want that network to flourish, like how mutual fund requires that network. And hence we have to see that there has to be financial viability in what they are offering. One single market may not be able to offer that. And we should sincerely believe that their existence remains intact, like how LIC agents network is there, and that's why they are getting the whole flow to the industry. We have to do this rather than just having a few machines trading on the market and then we are nowhere. And our real competition is China, not within exchanges, not within to industry. We should stand up from the east, competing China, and not our stock market versus our commodity markets, or not between us. And if you've seen in our market, there is a full unity.
Mr. Anand Kumar, coming to you then, I mean, we have talked about what shouldn't be done, but what needs to be really done? I mean, if we had to look forward to this budget, what would you want to see through in this time?
Yeah, probably the taxation structure should be streamlined. I think that's one of the important factors, because today what's happening, it's treated as speculative income coming here. And over and above that, we have all other taxes which are, as is other said, sales tax, VAT, and all other taxes are there. That could be uniformity should be maintained in this.
Mr. Shah, your comments on the same thing. What would you look forward as an industry, as an exchange from this budget?
I think rather than I'm saying why now, internally we have discussed, all of us, and all exchange here feels that if, while it is not a budget issue, but if FCRA and autonomous regulator is been done for this industry, which is second to the stock exchange and really serving the purpose, 15 lakh jobs have been created in this, so much of warehouse has been created because of this, so much of investment has flown into warehouses, and even the international investment can come into the warehouses. I think it is really doing a very big catalytic role for the economy. And I said 15 million jobs, 15 lakh, 1.5 million jobs have been created based on this. If FCRA is passed, autonomous regulator is done with search and seizure power, dabba trading problem can go, and this industry can really create even 10 times more jobs in true sense.
Well, absolutely. Mr. Mishra, taking that point from Mr. Shah to you there, I mean, we talk about putting more taxes, and we already are dealing with more taxes in commodity space here. So we can actually do with more growth into this space. What's your sense on what couple of points would you want from this budget?
You see, one thing that this speculative income should be considered as business transaction. This will attract big corporates who are not coming because they are coming for hedging. So if they have a corresponding gain in the futures market, that is considered as a speculative income. So they don't have incentive to come, because though they are hedging, and whatever money they are getting is considered as speculative income. And then to facilitate others, like ecosystem, you have to have a warehousing system. Now WDRA has come. Now for those instruments to be traded, you need something like futures exchange, where the delivery can be given at different remote locations. Because today we have limitation of warehouses which can be risk-free, where we can see that there is no risk on quality, quantity, and it can be delivered. For that, negotiable warehousing receipt, which will come through WDRA, will be facilitating the growth of this market. They will be complementary to each other. So we have to think of facilitating things so that it spreads, because you need everybody to be part of it, and more people come on the hedging platform and do not consider this as speculative.
Mr. Anand Kumar, coming to you as well then, I mean, we talk about taxes, just keeping that point alive into the discussion here. There are so many taxes, and do you think it's more about strengthening this market, not just in futures, but in forwards and spot market as well? I mean, we have the e-commodities also happening now. Do you think there's more need to do that than talking about adding more taxes here?
Yeah, absolutely, you're right. See, what will happen is presently the taxation structure in one state is not similar to the other state, right? Even if the movement of goods, when it comes into, let us somebody has sold at one state and he wants to transfer it to another state, there are a lot of probably hassles he will be finding it. So in order to avoid that, if the government comes at it, of course GST is one solution which they are looking at, equal probably amount of taxation across the country would help even the farmers, for that matter, the value chain participants who are there, to ensure that they come into this market and head their produce here. That will be the best way of doing it.
Mr. Patel, coming to you on to that, I mean, as an industry, when we are putting forth some policy issues, we have been asking for FCRA for such a long time. What do you think is really delaying all of that process?
I think here this industry has a perception issue. commodity market because of its historical thing is being banned, and then particularly some product being price sensitive and political sensitivity. I think this what is required is, and then of course the efforts are exchange, and FMC is doing that, bringing in the proper perspective and making the awareness of what this industry does. Sometimes what happens is just a particular view gets popularized, and nobody actually really try to correct it, and that's what is happening. And here in this incident also itself we are saying this, that if your airline business is going down, would you ask that the make railway tickets very expensive? I mean, this is something quite funny, I would say. So the issue here is, and this is what we did, we need a strengthening of the market regulation and the entire system. We need uniformity to the extent Constitution allows, because we have state and central subject. Uniformity in terms of the structure, taxation plus other structures. We need to have a coordinated effort to be done to link the spot and the futures market in a more closely, tightly coupled manner.
Sure.
This is one industry where we may compete fiercely for business, but we cooperate for regulation. I think this is the fundamental rule which is prevailing amongst all the exchanges in commodity market, and that's a good way to have a healthy industry.
With that, we come to the end of this show. You have heard all the heads of all the exchanges in the Indian markets, and this is what they are telling you, that CTT is something that they do not want. They are standing as a unified industry here. Competing with each other is not the point. Competing with the other outside countries is what they are looking forward to. Also, strengthening the markets, getting in FCRA is another major point that the markets are keeping out for this budget 2013-14. With that, thank you so much, gentlemen, for joining us today. And that's all the time we have on the show. Thank you so much for watching.